Steve, let's begin with you. As we look at these tariffs and some of the changes, whether it be exemptions or new tariffs being implemented on things like steel and aluminum coming up next week, how does that impact business decisions and also hiring decisions?
Yeah, we're on a tariff roller coaster for sure. And, CEOs look at these tariffs and they say the rules of the game are changing, the environment's changing, and everything's stopped. It's full stop right now. You saw it when the executive orders came out on January 20th. Everybody froze decisions. And this is not good for the economy because, all capital decisions here roll through. But it is expected. Uncertainty freezes CEOs and business environment. We're sitting here at record unemployment lows. We've got massive millions of job openings, but you've got skill set shortages all over the place. And so you need a little bit of looseness coming into the market. Whether or not this will do it, we don't know. This jobs report won't tell us much because the survey closed on February 15th. Since February 15th, you've had lots of DOGE cuts. You've had unemployment or layoffs from BlackRock, JP, Starbucks, Estee Lauder, Amazon, Microsoft, Meta. So a lot of activity post this jobs report. Next month will be more instructive. But right now, CEOs are in waiting mode.
All right, Bill, coming over to you. I mean, you have so much insight into the consumer. How do these tariffs impact the consumer and also the idea of these exemptions and carve-outs that we're seeing? We heard the Target CEO saying produce prices are going to come up higher or move higher this week. I'm not sure if avocados are covered under USMCA or not. But in general, when we're talking about consumers, how big of an impact does this have, this whole tariff strategy have on them?
Yeah, good morning. It's more of a panic than it is a practical impact on the consumer. Ultimately, the consumer decides what the tariffs are, right? If a tariff goes on a product, goes on avocados, they either have guacamole or they have salsa and queso with their chips. They don't necessarily have to take the price increase that comes with the tariffs in certain categories. The issue really is the uncertainty, and tariffs are a blunt instrument as they impact the economy. And if you're using tariffs to try to change manufacturing or shift a base like the president's saying, it takes years to make those changes. And when there's as Steve was saying, when there's uncertainty, it just sort of causes pause in the market from a business decision standpoint. But what it doesn't do is cause a pause from a consumer standpoint. They still eat, they still shop, they still go out, and they still behave. They just behave differently based on the prices that flow through to them based on the tariffs.
Well, Bill, I understand your thesis here is that the consumer decides if they want to pay the tariffs. If guacamole is more expensive, they can decide not to eat it. But what if the tariffs are causing broader inflation in the economy? What does that do to the consumer and also consumer confidence when it comes to spending on wants versus needs? I mean, no matter what, we're going to buy something to eat. We have to buy gas and things like that for our cars. But what about the other parts of the economy?
A tariff really just squeezes the balloon. It doesn't inflate the balloon. It just makes certain things more expensive and other things relatively less expensive. Overall, the consumer will shift. There'll be price increases in certain categories, and then there'll be increased demand on other products that should drive prices, should change prices. It really shifts the equilibrium. It doesn't really inflate the whole market. The challenge for the certain companies and certain brands is if they don't have secondary and tertiary supply chains. The big retailers, Walmart, Costco, Target, Amazon, have secondary and tertiary supply chains and the availability to mitigate much of the tariffs, many of the tariffs. And in fact, with the China tariffs several years ago, most of the retailers, the big retailers, already have alternate supply chains to be able to mitigate them. So I think that the market reaction to the tariff uncertainty, as Steve said, is more pronounced than the consumer reaction is going to be, because right now there really hasn't been a lot of flow through of prices. As it comes through, the consumer will make decisions based on which prices and products are flowed through to them, and that hasn't happened yet.
All right, so we're not only talking about consumers making decisions. Steve, I want to come to you. We're talking about CEOs making decisions. So we brought this up earlier in the show. Layoffs, they ticked up about 245% higher in February than they were in January. How are CEOs making decisions with all this tariff uncertainty? How does it impact hiring, the decisions to reduce workforce, and also capital expenditures when it comes to new projects?
Well, CEOs clearly hold back on investments, capital, because you don't know your cost of capital if all of this change is happening. So therefore, you can't commit and make sure that you make a return. Hiring also gets frozen during this period of time. Some of those layoffs you mentioned, of course, came after this survey. But Bill's exactly right. I mean, there is substitutability from good to good in the marketplace. And the question is, if these tariffs stick, and it's a big if, and people don't know whether it's just negotiating strategy, throw it on, get some reaction from our allies, and then release them. The president has been very clear. It's short-term pain for long-term gain. How short-term? I mean, nobody's defined that. So CEOs are just saying, okay, let's time out. Let's just wait here. But you did see a big drop in the Conference Board's Consumer Confidence Index in the last month, and it's all around tariffs and inflation. And remember, the majority of consumer households live paycheck to paycheck. And so it's a matter of what do I have in my wallet this week and what can I spend, and the substitutability, what's there and so forth, and then what will be there in the long term. The other thing is who pays the tariff. So this is collected at the port of entry, but you can push that back up through the supply chain, and you're hearing that countries of origin will contribute to that. So it's not necessarily a one-for-one ripple through the economy through this. But the whole point here is the
Steve,
thing
one
that we
second.
worry about.
I think that's the hope that the countries of origin will pay part of it, right? I mean, I think the hope is that the countries of, but the fear is that it's going to raise inflation, which is a big issue in the economy. I want to switch gears just a bit because we only have you guys for a bit longer. Another data point that came out yesterday from ADP: small business payroll growth was negative after 14 months of increases. Now, I know you largely represent large enterprises, but do big CEOs, do they look at this action or this trend when it comes to smaller companies? How do they read that?
Well, we represent everybody. I mean, our members are everybody. And it's true, the smaller CEOs, our smaller company CEOs are really concerned about this. Majority of jobs in this country are with smaller businesses. And so, any ripple through there is a big deal. We tend to quote the big names. But yeah, everybody's frozen at this point. Everybody's holding. It's true. And so therefore you will see a ripple. I think next month's job report will be lower than whatever we experienced this morning. So I'm not sure this morning's going to tell us a lot. The question is, what's the impact of DOGE, right?